Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin as it has now fallen below 100K. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, as we mentioned, Bitcoin is now below $100,000. It goes to show just how quickly narratives are changing right now and why it makes sense to be open to multiple outcomes, right? Some people will sort of chase one narrative one day, and then the next day they'll only talk about the other narrative, right? Um, or whatever, right? I mean, it's important to remember that markets are constantly shifting, and it's okay to sort of have more than one potential path in mind. But one of the things that, we have spoken about a few times is will Bitcoin continue this move into February that it did last year, or will it deviate? Now, remember last year Bitcoin sold off sort of the end of January, and then in February it started to move up again. Now, this time we haven't seen that yet, although you could still argue Bitcoin is curious as to where the labor market data is going to come in. But there's obviously multiple things that we should be thinking about right now as it relates to Bitcoin. Number one is that the stock market has been struggling a little bit recently. The weekly candle still looks relatively okay, but one of the main reasons that the stock market is stalling out is because Nvidia has been stalling out, and that's been one of the blue chips for the stock market for the entire bull market since the end of 2022. So that has been struggling, and I've wondered, and we talked about this a little bit yesterday. I have wondered if Nvidia is signaling that, something's going a little bit awry in the markets, because last year when Bitcoin got that rally in February and March, Nvidia was going up in January and it continued going up into March. But this time Nvidia has been dropping in January as opposed to going up. So it does make you wonder if it's signaling that something perhaps is a little bit different. Obviously, we've talked about Bitcoin market cycle theory. We've talked about right translated cycles and left translated cycles. And we'll probably do a longer video just on that topic. In the short term, though, I think the thing to think about is that at this point, right? I mean, again, this is one of those things where it could come to pass, right? At this point, the all-time high occurred just before the new administration took office. Now, the reason why that's relevant is not because it has to be sort of the all-time high, but the reason why it's relevant is we spoke about this many months ago, many times in fact, that you could see sort of a high, whether it's, a potential local top, the week of January 20th. And then the reason we mentioned that was because by the week of January 20th, you have to believe that a lot of basically every good thing was getting priced in, right? A strategic Bitcoin reserve, all the deregulation, Gary Gensler resigning. And it was such a good thing. Obviously, everyone's really bullish. And then before you know it, right, we haven't actually put in an all-time high since we got the new administration. Markets do that a lot of times, right? They sort of rally into the news, and then when it actually happens, the market sells off. Now, I think the reason for that could be a number of things, right? One of which is just simply, the market's actually looking to see, do you actually get a strategic Bitcoin reserve? Or do you get it immediately? Does it take a couple of years? Right? What is the narrative there? Remember this the ETF took far longer than we thought. And so it's important to remember that sometimes things can take longer than we ultimately think. And so it could be the market's way of de-risking as it's trying to figure out of all these promises what's actually going to happen. One of the things that I think the market could be somewhat concerned about is that it seems like the narrative has pivoted from strategic Bitcoin reserve to, strategic crypto reserve. Now, a lot of people watching this video probably think that's a good thing, right? And I'm not really here to tell you if it's a good thing or a bad thing. But at the end of the day, what normally happens in post halving years is, as a whole, the market starts to collectively focus on things that are arguably a little bit frothier. And normally it's that focus that then leads to bear markets in midterm years 2014, 2018, and 2022. You could obviously argue something similar could very well happen in 2026. Now, ideally, we would get a right translated cycle where the cycle peak occurs in Q4 of the post halving year. If you go back the last 3 cycles, you'll notice that there was a high in Q4 2013, in Q4 2017, and in Q4 of 2021. We do know, though, that there are times in history where you can, in fact, get left translated cycles, and it generally occurs when you have inflation and labor market kind of not being very well behaved, right? Like in the 1970s, you saw various spikes by the unemployment rate. You also saw various spikes by the inflation rate. And so because of that, when you get these spikes, it can lead to left translated cycles, right? The first cycle in this sort of inflationary dilemma was a right translated cycle where you had a 1-year bear market. But the second cycle was a left translated cycle where you had a 2-year bear market. And the third cycle here was also a left translated cycle where you had a 2-year bear market. And the reason this stuff kept happening was because you kept having waves of inflation that then meant the Fed had to tighten again, which then led into recessions. Now, there's no denying that fact that we just had the uninversion of the yield curve, and that it could eventually mean something to the markets. That doesn't mean it has to mean anything right now. The lag time on that stuff sometimes is immediate, and other times it can be a year, right? It's not like just because there's a sell-up back below 100K that it means that it has to be the case. There's also other ways you can look at this beyond just these 2-year bear markets that occurred. Obviously, that's like the worst way to look at it. That's somewhat reasonable. You could also look at other times, like in 1981, right after Reagan took office. Right after Reagan took office, you could see the markets trended down a little bit, but it wasn't like a 2-year drop. And then eventually the markets then rallied back up again. So some of the times, I think the reason for that occurring around the time of a new administration that sort of leads to an earlier top than people are thinking could be just due to a lot of the uncertainty that can come with new administrations. Obviously, the new administration has been implementing a lot of tariffs and whatnot. And I think that there's just a lot of uncertainty as to, what all is going to happen and you know, how will the market ultimately react? And I do think a lot of that is sort of combining into keeping Bitcoin at bay. Now, I think we're going to have to just simply see where the labor market data comes in this coming week. As I've said previously, if it comes in at 4.1 or so, 4.2, it's probably relatively okay and not that big of a deal. I think the bigger issue could be if it comes in really, really high or if it comes in really, really low. If it comes in really, really low, that could be a very big tailwind for the long end of the yield curve. If it comes in really, really high, then it might mean the Fed needs to cut more, but then the market might start to care about whether the Fed needs to lower interest rates. I think right now, one of the things that the market was sort of expecting was we saw the Bank of Canada announce the end of quantitative tightening. The Fed did not follow suit. Now, not only did they not follow suit, they didn't really give a timeline on when quantitative tightening would even end. All in all, as long as QT continues and the economy holds up okay, then Bitcoin could still go higher. But again, we're going to be getting a lot of macro data over the next couple of weeks. You're going to get the labor market data, the very beginning or throughout next week, and then you're going to be getting inflation data the week after. So we'll see what happens. But I remember recently, at least last month, good labor market data was actually bad news because the long yield curve went up, and good inflation data was actually good news because it meant that the Fed was cutting appropriately, right? And maybe could justify even more cuts down the road. One of the things that I continue to think about, and it's not because I think it's the most likely scenario per se, but it still continues to be that QQQ comparison. To be completely honest, I'm kind of sick of it myself. I would like to just move on from it and not think about it much anymore, and just have it be one of those things that you kind of see it and then the market climbs the wall of worry. But just to point out for once again, when the Bitcoin ETF launched, it so far it rallied for, I guess it no, it actually launched right here on this wick right here, the week of January 8th, right? So far, the all time high occurred 54 weeks later. We have not yet been able to take that out. Now, hopefully we do. Right? Hopefully we do take it out, and we can sort of do away with all this nonsense of, is it going to be a left translated peak or not? But the only reason I mention it, as I've talked about before, is when you look at the QQQ after it launched in 1999, we saw it rally for exactly 54 weeks, right? It rallied for exactly 54 weeks, and then there was a pretty big drop, right? And then you had that was even a more severely left translated cycle, because that happened in March of 2000, right? If Bitcoin had done something like that, that'd have been like, topping out last March when it was just a local top. Now, we thought it was just a local top last March and not a market cycle top, but what ultimately happened is there was a big drop and then a rally into a lower high. Now, all in all, if you go look just at the ROI of Bitcoin as measured from, say, the low, right? If you look at it as measured from the low, one of the things you will in fact notice is that at this point in the cycle, Bitcoin is where it always is at this point in the cycle, right? This is where it always is at this point in the cycle. And so, I think there's some element of like, why worry about something that is still pretty much doing the same thing it did last cycle or 2 cycles ago, right? I mean, and even last cycle, I mean, it's not like it was, it was more or less the same structure, right? Maybe last cycle was a little bit more, a little higher, but all in all, very similar ideas, especially when you zoom out and look at the market cycle as a whole. If you measure it from the halving, it still looks relatively normal. So when you think about that, it doesn't really seem like it's any different than it's always been. But the one thing that I think has been troubling the market is the fact that, you know, the altcoin market hasn't really been able to keep pace with Bitcoin. In fact, a lot of these alts just keep on bleeding back to Bitcoin because the Fed continues quantitative tightening. The Fed continues quantitative tightening because there's really not a reason to stop it, or at least there hasn't been. One thing to consider, and I don't know if it's going to play out or not, but one thing to consider is that when the QQQ did eventually get a larger drop back then, after rallying for those 54 weeks, it ended up dropping right here down to around 63, right? It rallied all the way up over 100 and then dropped down to 63 before then getting a sizable bounce. Now, the markets likely aren't going to play out in the exact same way, but the reason I point it out is because if Bitcoin were to get a drop like that, it would obviously not be good, and I don't really think anyone would really want to see that. But if it were to happen, what's really interesting about it is that you can see that if it dropped down there on the same time frame that it dropped down there with the QQQ, and that was in April, that would actually also correspond to 63K and sort of back testing where this broke out from. Now, what I think could happen is if there is a drop, it would likely be a reason for the Fed to kickstart quantitative easing. And from there, you might actually see the altcoin market outperform Bitcoin. It's kind of like, if you go back and look at the S&P divided by M2, this is where it stalled out in 1998 before it got a 20% drop. I'm sure everyone thought the cycle was over, and then it got another massive rally higher. So that's also something to consider here. Like, if there is a drop, it might not be, quote unquote, the big one, right? It maybe you get the final tool that the Fed has, turning the money printers back on, and then perhaps we'll deal with our problems later on as perhaps inflation comes back, and then we have to deal with that. But it is important to note that the only way that you're really going to see a period, in my opinion, where alts durably outperform Bitcoin is you need the Fed to end quantitative tightening. But in order for the Fed to end quantitative tightening, you need something to spook the market to cause the Fed to end quantitative tightening. So as long as that doesn't happen, you could just simply argue that Bitcoin is going to outperform the altcoin market. So let's say that Bitcoin doesn't have to go back down here, and instead we just see Bitcoin break out next week. Well, the only way that alts are going to go up is if Bitcoin breaks out. And if Bitcoin doesn't break out, then alts get hammered. So it kind of goes back to the same old sort of strategy that we've been talking about for the last 3 to 3.5 years, is that if alts require Bitcoin to go up in order to go up themselves, and because quantitative tightening hasn't ended, and since all Bitcoin pairs are bleeding, then why not just hold Bitcoin over the altcoin market if you're going to hold something in crypto? Again, the reason is because the only way, the idea is because QT hasn't ended, the only way alts go up is if Bitcoin goes up first. But if Bitcoin's going to go up first, why hold the alts hoping that Bitcoin goes up? Why not just hold Bitcoin? And if Bitcoin goes up, then dominance likely goes up. And then you could trade it in for altcoins later. The counterpoint is if Bitcoin doesn't go up, the altcoins are going to get hit harder because quantitative tightening hasn't ended. So again, as much as it feels like we should be getting close to the time when Bitcoin dominance starts to show some weakness in the post-halving year, the other side of it is, well, monetary policy really hasn't necessarily changed that much. And if it hasn't changed, even though it is the post-halving year, maybe that needs to be up for consideration. The other thing to consider is that even in the 2 cycles ago, you have to remember that alt Bitcoin pairs didn't even get off their range lows until November of the post-halving year, right? So it's not like it's impossible for alt Bitcoin pairs to just kind of bounce around in here and then eventually get down here by the end of the year and then get a big bounce, right? I mean, that certainly could happen. And I think that's probably not on most people's bingo cards, but it is something to consider. I think one thing to consider as well with Bitcoin here is, like, if you go look at not just the ROI from the low, but just say like the year-to-date ROI of Bitcoin in post-halving years, you can see that oftentimes Bitcoin does get a slow start to the year, right? It's not like in every post-halving year the market just goes straight up, like a lot of people think. I mean, even if you look at 2021, right, it stalled out for basically the first month before doing anything. And you can see that at this point in the cycle, Bitcoin's not really that far away from where it was in 2021. Even in 2017, right? If you compare where Bitcoin is in 2025 to 2017, Bitcoin's actually ahead of where it was in 2017 at this point in the cycle, you know? So if you were only looking at a Bitcoin chart, year-to-date ROI, market cycle ROI from the low, halving year ROI, you wouldn't even know anything's wrong, right? The only reason you might suspect something is that the altcoin market just doesn't seem to go anywhere. And because other things like Nvidia have been showing some weakness recently, and does that mean something? I think a lot of the sort of the paths we've talked about, whether Bitcoin will see that rally in February and March, sort of mimic what it did last year. I think a lot of that's going to be answered this coming week. The labor market's going to either be doing great or it, showing signs of falling apart. And I think a lot of it's going to depend on that, to be completely honest. And this is exactly what Bitcoin always does, sort of going into labor market week, right? I mean, it just kind of goes back up to the range highs and then waits for the labor market data to come in. If the labor market data is good, like February 2024, it breaks out. If it's bad, like over here and over here and over here, when the unemployment rate was going up, right? That's when Bitcoin sells back off, and we have to wait and we see if it can go up again later. So I think a lot of it's going to ultimately come down to that, right? I think a lot of it's going to come down to what does the labor market actually say? How are things going? I do think there's some element of uncertainty associated with all these executive orders that are coming out and tariffs and whatnot, and wondering, well, are these tariffs going to be inflationary? Because a lot of times tariffs do get passed off to the consumer, whether we want to admit that or not. That's the reality. So I think that is sort of the thinking, the thought process behind the market. I think that the Fed still has some tools to try to delay things. If things do start to fall apart, they could lower interest rates a lot more. They could start back quantitative easing. I would say that if it's going to be a right translated cycle, then Bitcoin should start moving up relatively soon. If it's going to follow a left translated cycle, then I think what would happen is you would get a big drop sometime within the next month or two, followed by then a big rally out in, say, later on Q2, Q3 that would resolve into a lower high. Again, there's no way to really know, for anyone to really know, which of those outcomes is going to be, but that's what I would look for, right? If it's a right translated cycle, we should just continue up in February and March. If it's a left translated cycle, you would likely get a big drop in the next month or two, followed by a massive rally that would resolve to a lower high that you could theoretically sell into if you truly think the cycle's over and it's a left translated cycle, not because of Bitcoin, right? I mean, I think a lot of people sort of think that, there's something wrong with Bitcoin if you get a left translated cycle. It has nothing to do with Bitcoin. I mean, it's more so just due to monetary policy and inflation and labor market. That's the stuff that can affect the markets. And that's stuff we have to talk about. There's nothing to do with Bitcoin. I mean, at the end of the day, we're here because Bitcoin generally goes up. And I think over the long haul, a lot of us truly think that it will go up over the long haul. Well, that doesn't mean you can't have some cycles where it throws you some curveballs, and you got to learn from those mistakes. In the short term, Bitcoin's at the same price it's been at for the last 2 months, right? Nothing's really changed. I'm only pointing these things out because I'd rather point them out now and at least get people thinking about it than to just point it out 2 months from now after it's, potentially obvious that, oh, maybe that was a more significant area than we thought it was. And perhaps there's some repercussions that we have to deal with for a little while before we can ultimately continue higher. So those are my views on the market right now. I think that this cycle has been really repetitive, right? Where it just kind of goes up and fades, then goes up and fades. And it does that over and over and over again. And what sort of separates these fades from Bitcoin going up is the labor market, right? I mean, that's all I can tell. And also the long and yield curve, right? When the labor market's moving up aggressively, like here and here, Bitcoin struggles, right? It fades downwards. You can pretty clearly see it if I remove all these rungs, right? As the unemployment rate goes up, Bitcoin fades, right? Up, Bitcoin fades. But whenever it consolidates down here, like this, then Bitcoin uses that as an opportunity to break out. So I think there's no way to know just yet, but I do think a lot of it will ultimately come down to the labor market data this coming week. That's what I think. And that will sort of dictate, in my opinion, a lot of what will happen for the rest of the year. Now, it might not just be that. It could also be the inflation data sort of combined. But I do think that those are going to be some of the bigger stories as we get further out into this year. But those are my thoughts right now, right? Obviously, Bitcoin's below 100K. People are worried, wonder what's going on. I just want to talk about, some of the scenarios to consider here, and we'll see what happens next week, and then we'll, circle back and talk about what it means for Bitcoin depending on where the data comes in. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.